Hello, friends. Today we'll start with the conceptual sums of the chapter of fundamentals of partnership. Now, before we start, I already told you that every single question that the examiner can think of, irrespective of the board, all the past year questions, all reference materials, all your board's official book, all the questions are covered here. So before your exams, anyway, you're going to solve the questions along with me. We're going to maintain the same pace. And every single point you'll understand easily because the reason I took two lectures just for explaining the basic concept of P&L appropriation, then journal entries and capital account is because your concept is now very thorough. Now, all the sums we do, you're going to grasp easily. Now, another thing. Now, before your exams, there's a method of revising, like 1 day or 2 days before the exam when you're revising. I don't want you to practice all the 20 to 25 sums we're going to do here. It's a waste of time. I want you to read through the 20 to 25 sums, and for every lecture, I'll mark one important sum. That important sum will cover all the points of fundamentals of partnership. So, if I want to read all the solutions that you've written by hand, and you practice 2 3 sums before your exam, like based on difficulty, one easy sum, one hard sum, one medium sum, that I'll put a tick mark now during the lectures, and you go write your exams. You will be able to solve each and every question the examiner is going to give you, and easily also. If others are taking 25 minutes, you're going to take only 15 minutes because your concept is thorough, and no examiner can shock you because everything that the examiner can think of is mentioned here. Now, before I start with the questions, I have to mention another important concept here. Now, we'll take an example. Say you and me, we start a partnership firm. So you and me, we start a partnership firm, and I come and tell you will contribute equal capital. That is 1 lakh and 1 lakh each. So I tell you that since we know each other. I've taught you accounts during your 11th and 12th grade and CA foundation days. So let's start a partnership firm. I know you trust me. So let's not have a partnership deal. So this happens. So after we start a partnership firm without the partnership deed, I don't work at all. I just take rest. But you give your heart and soul into the business and you work 24 into 7. And at the year end, because of only your hard work, the business makes 10 lakh rupees profit. Now, at the end of the year, I come and tell you that, see, I understand you worked a lot, but since the capital ratio, we contribute equal capital, shouldn't the profit be divided in the ratio of 1:1? To be honest, I didn't deserve even 1 rupee of the profit, but I come and tell you this. But in this case, you will not be able to do anything. You will have to agree, or the partnership will be terminated, and anyway, it will be a headache. So you can't even go to the court and file a case because you don't have anything in writing. You don't have a partnership deed. You just have word of mouth. So here I give you two important lessons. One, even if you know the person, even if you trust him very much, when it comes to business, keep everything in writing. That is lesson number one. Practical lesson number one. And second one, whenever you start a partnership deed is a must. That's what will tell you how the business is run, what will happen in case of any disputes. So if that is not there, it's no use of running a partnership. But however, in as per Indian Partnership Act, there is a specific provision which says that in case there is no partnership deal, then how will profit and loss be distributed? Will interest on capital be charged? Will interest on drawing be charged? Can we give a salary to a partner? Can we give commission to the partner? So all those points are mentioned in partnership. Write this down. In as per Partnership Act of 1932. In case of no partnership deed, these are the following points which will be followed. First point, no interest on capital will be provided. Write this down. Second, no interest on drawings. Then no salary or commission will be given to partner. Then profit sharing sharing profit sharing ratio will be 1:1. And finally, any interest on partners loan will be 6% per annum. So these are the 5 points that will be followed in when there is no partnership deal. Now pay attention to these 5 points. There'll be immediately next we are going to solve a question that'll clear every doubt you'll have regarding these points. But basically they say that if there is no partnership deed mentioned, and that in that case, the business cannot give any interest on capital to the partners. It cannot charge interest on drawings on the partners. It cannot give any salary or commission to the partner. And since there's no partnership deed, the profit sharing ratio is assumed to be 1:1. Like if there are 3 partners, then it's 1:1:1. 4 partners, then it's 1:1:1. So equally. Bracket you can write equally. Profit will be distributed equally among the partners. So if it's 1 lakh and there are 4 partners, it's 1 lakh divided by 4, 25,000 each. Then interest on partners loan will be at 6%. See, interest on partners loan is just like you mentioned before. Partners loan is instead of giving a loan to an outside party, the partner is lending money to the business. He's like an outside party only in this transaction. Partner's loan is not part of his capital. So in that loan, 6% of interest per annum will be given by the business to the partner. So this is the concept of lack of partnership deeds terms. Now, let's start with the first question. See, I already told there's a PDF that I've given below. So that PDF contains every sum that I'm going to do here. So every single concept and every single term and point that can be covered is mentioned in the PDF, and the PDF is what we'll solve through the entire lectures. So if you want, you take a printout of the PDF or you keep a soft copy, whichever is comfortable. I'll display the questions every time, but it's better if you keep a soft copy. So we'll start with this directly. So this is the first question. This is related to when there is no partnership deal. So here, A, B, C are partners in a firm. They do not have a partnership deal. Now, first case, A, who has contributed more capital than others, demands interest on capital at 12% and share of profit in the capital ratio. And second point, B has devoted full time to run his business and demands salary. C demands interest on loan at 12%. Net profit is this much. Okay. How will the disputes be settled? Here, they're not asking you to prepare P&L appropriation account. They're just asking you how will the dispute be settled. This is a conceptual question. This came for, I think, 4 marks in one of your tests, either quarterly, half yearly, or even in a board. Now, let's start. A, B, and C are partners in a firm. So, first point, they do not have partnership deed. So, A, who has contributed more capital than others, demands interest on capital at 12% and share of profit in capital ratio. So, what does this actually mean? That means assuming A, B, and C are there, and A contributes 100 rupees, B contributes 200 rupees, and C contributes 300 rupees. So what A is telling is, I want, they don't have a partnership deed. So A is telling that I need 12% interest on capital. And the share of profit and capital ratio means they want the capital to be divided, profit to be divided in the ratio of the capital. That is 1:2:3. If there is 60,000 is the profit, then they want it to be divided in the ratio of 1:2:3. That is basically 6,000. Oh, sorry, 10,000, 20,000, and 30,000. That's what they're asking you. But like I mentioned before, if there's no partnership deed, the points are there'll be no interest on capital will be provided. Correct? And profit sharing ratio will be equally. So it's not allowed. No interest on capital and profit sharing ratio cannot be done in capital ratio. It will be done equally. This is the answer for the first point. Write it down against the you write question number 1 and you write it in a notebook, because next questions is going to be proper conceptual sums. Now, second one, B is devoted full time to run the business and demands a salary of 10,000 per month, but A and C do not agree with him. See, this point A and C do not agree with him does not matter, because there is no partnership deed. Even if A and C agrees to it, then also you can't allow this. If they agree to it, then they put it in the partnership deed and they prepare a new partnership deed, then only every term will be followed. But if they don't have a partnership deed and they simply agree, then also it's assumed that they don't have a partnership deed. So B has devoted full time to run the business and demands a salary of 10,000 per month. This also is not allowed because there is no partnership deed. And partnership deed clearly mentions if there is no partnership deed, then no salary or commission will be given to the partner. Correct. See, these questions, when there is no partnership deed, it's mostly theoretical. It won't be sums based. But you keep these 5 points in mind. It's a very simple point to remember. No interest on capital, no interest on drawings, no salary, commission, and profit sharing ratio is 1:1, and interest on loan only 6%. That's all. Now next, C demands an interest on loan of 1 lakh advanced by him to a market rate of 12%. See, he'll get an interest on loan, but 6% is only he'll get, because that's the maximum amount rate prescribed in the uh, Partnership Act of 1932. Then net profit before taking into consideration any of the above claims amounted to 1 lakh at the end of the first year of the business. This point is completely not required. If they say prepare P&L appropriation account, then yes, this point will be taken into consideration. It should come in the credit side of P&L appropriation. Here they're only telling how will the dispute be settled. The fourth point does not have any dispute. So this is the concept of Partnership Act 1932 in case of when no partnership deed. So the reason I went fast is I'm going to start with the conceptual questions right now. I want you to pay close attention to this chapter. Now, let's start. First question. This is the second question in the PDF. So write it down. Don't write down the question, just write down answer to number 2 and maintain a separate notebook for this. On 1st April 2022, A and B started business with capital of 10 lakhs and 6 lakhs respectively. During the year, they've drawn 1,20,000 and 80,000. Okay. Then these are the things that happened during the year. It has to transfer 10% of net profit to general reserve. Interest on capital is 10%. Interest on drawing is 6%. B is allowed salary. A is allowed commission. And balance profit was shared equally. Correct? Now, before I start, I would like to give you a revision of what we have taught until now. Just a 2-minute revision. So what did we learn till now? Basically learned P&L appropriation accounts preparation. So P&L appropriation account will come after profit and loss account. So net profit and profit and loss will come in P&L appropriation account. Then all the distribution of profit between partners will be here as per the partnership deed. Correct? In case if there's no partnership deed, then as per Partnership Act of 1932, the distribution will happen in that way. You don't worry, you'll get sums related to that also. Now, so what will come here? Like mentioned above, any services or capital given by partner, only payments regarded to services given by partner and capital contributed by partner will come here. That is all interest on capital, commission, salary, then interest and drawing will come here. It's just the opposite of interest and capital. Then we have our general reserve. General reserve is not a distribution of profit. It is just keeping profit aside. This is the only exception to this rule of any payment to only services done by partner or capital contributed by partner will come in P&L appropriation account. Then balance profit will be divided between the partners in the ratio of the capital. Correct? This is what we learned till now. And also we also learned any partner's loan or rent paid to partner will not come in P&L appropriation account because it does not satisfy the criteria of the only payments in respect of services rendered by partner or capital contributed by partner will be coming in P&L appropriation account. Anything apart from that, even if it's given to partner, will come in the profit and loss account. I explained it in detail in the first lecture. So we look through it. So again, interest on capital is against this capital contributed by the partner. Salary and commission is regarding services contributed by partner. General reserve is the exception. Balance profit also is regarding services contributed by partner. They're running the business, right? So balance profit will be transferred to the partners because they ran the business. That is also services given by partner. Now, interest on drawing is just an opposite of interest on capital. For now, I want you to remember only this much. Detailed concept of all these terms will be explained when we learn about the calculation of interest on capital and interest on drawings. Now we learned this. Then we also learn partners capital account. We learn there are two methods. Fluctuating and fixed. Under fluctuating, only one partner's capital account is created. And under fixed, there is one partner's capital account and there is one current account, partner's current account. Both will have separate opening and closing balances, as is just distribution of the main capital account. And every single point related to partners will come here in the under fluctuating method. Under fixed method, only opening and closing balance will come. And all other points will come in current account. That is all related to P&L appropriation and other points. The exemption to this rule is additional capital and permanent drawings. That's what we learned till now. Now revision is done. Now let's start with the questions. Don't copy that revision. That's just for making the concept fresh in your mind. Now this is when we'll do the original conceptual revision. Now let's start. I'm going to follow a particular format for solving every question. I want you to follow the same format during your exams also. So whenever there's a question in fundamentals of partnership and they're telling you to prepare P&L appropriation account and partners capital account, this is the format I want you to follow. First, prepare a P&L appropriation account here. Leave some space. Leave how much ever space you think you'll need. And you leave a little bit more space because in case there's not enough space and you want to write some new entry. This may happen during our other questions, more difficult questions. That's why I'm telling you to make it part of your habit starting now. See, my job is not only to explain the concept to you. My job is to make you score 100% in your exam. So I need to explain everything that is necessary for scoring 100%. Even the smallest things matter. Then I want you to prepare partners capital account here. Partners capital account. How many partners are here? A and B. So there are only two partners. So there'll be only two columns, like mentioned before. So A, B, A and B. See, there'll be a date column here, but I'm not going to waste time writing the dates now. Concept is more important. Dates you write on your own. As far as dates are concerned, we'll do more advanced and full-fledged questions. That time we'll write dates. But now conceptual clarity is more important because this is the first sum of fundamentals of partnership that's completely conceptual. Now, this is the format I want you to follow. For always fill our P&L appropriation account, leave it blank. Write credit debit also. Credit debit. Then here also. Credit debit. Now, partner's capital account. It'll be credited when it increases. It'll be debited when it decreases. So whenever there's an increase in partner's capital account or the claim of the owner on the business, I'll put it in the credit side. Whenever there's a decrease in the partner's capital account or the claim of the owner against the business decreases, I'll put it in the debit side of partner's capital account. This is the concept we'll always use for all the ledgers for the entire 12th grade because we need to save a lot of time. If you're not very sure about this concept, message me regarding the ledger account classes of 11th grade. I'll send you 2-3 lectures. Watch that and become thorough in this. It'll be about only 1.5 or 2 hours I'll take. But it's important to learn that first. Now, let's start. On 1st April 2023, A and B started business with capital of 10 lakh and 6 lakh. Correct? So what will be the first entry? Here, since they are telling on 1st April, A and B started the business. So if they started the business, that means there'll be no balance carried forward from last year. Correct? So if they started this year, they would have bought cash or bank. Always assume. So how much did they bring in? A bought in 1 lakh. And B bought in how much? B bought in 60,000. A bought in 10 lakh, B bought in 6 lakh. Okay. A bought in 10 lakhs and B bought in 6 lakhs. This is the first entry. Now, another doubt you may have. I don't prepare partner's capital account, but I didn't mention if it's fluctuating method or fixed method. Now, whenever they just mention partner's capital method account and they don't mention the method, always assume it is fluctuating. Even in your exams. That's why I prepared only one partner's capital account. This is the first entry. Now, second, during the year, they have drawn 1,20,000 and 80,000. So, drawings. Now, again, here they didn't mention which type of drawing it is. They just told drawn. So, always assume it is regular drawings. I already explained the classification between regular and permanent. I hope you revised because now it will be easy. Even if you didn't revise, it's fine. But revision is always good. So during the year, they have drawn. So always assume it's regular drawings. And even if it was permanent, like I told you before, under fluctuating capital method, board will come here only. So here, either write to bank, or you can write to cash, or you can write drawings account. I've told you the difference between all three in the previous lecture. And the impact is the same. So they drew 1,20,000. A drew 1,20,000. And B drew 80,000. So since they bought in new business, that's the first entry, they bought in new capital, partner's capital account increases. So if it increases, it'll be coming in the credit side. Then when they made drawings, that means the capital account capital reduces, right? So if capital reduces, it'll be debited. That is the concept you need to keep in mind while passing these ledger account entries. I don't want you to write journal separately than ledger. We don't have time. Now, because in your exam, it's more important to finish the question within the specific time limit than doing it correctly. Doing correctly is the primary thing, but finishing within the particular time is important because you need to, your aim is to get 100%. That's my aim also. I want you to get 100%. That's how I'm going to teach you. That's why I'm covering each and every point and every concept that is required. And I'm going to give you every weapon that you need to score full marks in your exams. Now, the next terms. Transfer 10% of net profit to generalism. So now this part deals with profit and loss appropriation account. Is what they're actually telling. These two deals directly with capital account. Here, it has nothing to do with capital account. It deals with profit and loss appropriation account because this deals with distribution of profit between the partners. And such, because they're telling 6%, 10% in salary, so it's assuming they have partnership deal. Now, see, profit is not given here, only net sales is given. So, write this down. Your profit and loss account balance is 7,20,000. Against the question, you write an additional point. Profit for the year is 7,20,000 because profit I forgot to give it in the question. Now, let's start with solving the question. So, net profit from your P&L account. That's what profit and loss means. Is 7,20,000. Correct. Now, what is the first point? Transfer 10% of net profit to general reserve. Follow the same format. Go from start to end. And whichever point comes wherever, you just solve that point individually, then solve the whole question. That's the best approach. Because few people solve P&L appropriation account first, then write partners capital account. Then there's a problem with there are problem chances of going wrong and the account's not tallying. Especially in few cases where balance sheet is required to be prepared. So that's why I'm follow this method. Solve each and every point as they go, and whichever point comes in whichever account, you put that against that account and keep solving the question. In the end, everything will tally. Now, transfer 10% of net profit to general reserve. So what does this mean? Net profit is this. If it comes from profit and loss account, it's assumed to be net profit, right? So net profit is this. So what do we do here? We write to general reserve and 10% of net profit. So 10% of 7,20,000. So 72,000 rupees comes in the debit side of profit and loss appropriation account. I hope you know this. This is expenses income. You can also write it like this. Debit all expenses, credit all income. I'm not talking about the traditional approach. Whenever expenses increases, it will be debited. Whenever income increases, it will be credited. I only teach modern approach in a logical way. Any doubt in that, go to journal entry concept. Now, interest on capital account to be allowed at 10%. Yeah. So how do we do it here? To interest on capital account. So there are only two partners. So since it is fluctuating capital method, it's only A's capital account. If it was fixed capital, we'll write A's current account. We'll do more sums, but for now, keep that in mind. In a corner of your mind, you keep it. Now, 10% of capital. So what capital? Always opening capital. Unless mentioned in the question, it's always opening capital. Yes, there will be few questions where it will differ, but that will be mentioned in the question. We'll face that hurdle whenever it comes. But whenever they say interest on capital, always take an opening capital. That is by cash, 10 lakh and 6 lakh. So A will be charged how much? 10%, right? So 10% of 10 lakhs and 10% of 6 lakhs. So write it in the inner circle, inner column first, separately for A and B. So 10% of 10 lakh is 1 lakh and 10% of 6 lakh is 60,000. Once you write it in the inner column, you add the total and you write it in the outer column. And now next, interest on drawings to be charged at 6%. Like I told you before, interest on drawing is an income for the firm. This means whenever the partner brings in capital into the business pays the partner money interest. That is interest on capital. But now, since the partners drew money from the business, the partner should pay interest to the business. That is what interest on capital is. Interest on drawing. Sorry. Interest on drawing. Again, A's capital account. Now see, all this to, buy and all, you don't pay the close attention. If you don't write, because as and when you grow up, like you come to CA and all, they don't care about this 2 by. They only care about this concept. So A is capital and B is capital account. Now let's calculate the drawings. A withdrew 1,20,000 rupees. So if it's 6%, 6% into 1,20,000 rupees. Then how much did B withdraw? B withdrew 80,000 rupees. So 6% of 80,000 rupees. Since I don't have space here, I'm writing like that. Now another thing, when you're in the 12th grade, they don't allow you to use calculator. So don't do mental math. Solve separately at 6% of 1,20,000 or 80,000 6%. Solve it separately. Even if it takes extra 5 seconds, it's fine. Don't do mental math and write the wrong answer. Because here they're not testing your mathematical ability, they're testing your accountancy concept. So these things are very minute details, but still, I don't want you to lose even half a mark. So even if you take extra 2 seconds to solve it, take the time. Because we are going to save a minimum of 3-4 minutes if we follow this concept. So it's 6% of 1,20,000 is 7,200 and it's 4,800. Now add 7,200 plus 4,800. And don't make mistakes in addition. That also is another thing. You may lose. It's a very silly mistake, but your whole sum will go wrong. Then B was allowed salary of 10,000 per month. Now only B is getting salary. So to salary, B is capital account. So they're getting 10,000 per month. So we are assuming B work for the entire 12 months. So throughout the year, it's 10,000 and 12. So 1,20,000. Correct? Now finally, A was allowed commission at 10% on net sales of 5 lakh. This essentially means A must have bought in more sales. So for the more sales in the partnership deed, it would have mentioned that A will get an additional commission. That's what this means. So in 5 lakh, we have to calculate 10%. So again here, 2 commission, A is capital. So it's 50,000. Since there's only one person, we can write it in the outer column directly. Right? So since I don't have space, you have a lot of space in your notebook, so it's fine. Right? These are the 5 points. Now finally, balance profit by shared equally. That means ratio is 1:1. If they didn't mention, then also we assume it's 1:1 only. Okay. Now, how do we calculate balance profit? Now I want you to add both sides. Follow this method. Wait, add both sides. So here it's 7,20,000 plus 12,000. Correct? So it's essentially 7,32,000. I don't want you to write 7,32,000 here. So write 7,32,000 separately here. I'll tell you why. Then add this side. 72,000 plus 1,60,000 plus 1,20,000 plus 50,000. 4,02,000. Now write 4,02,000 here. Now the reason why I mentioned this is I want just adding this side and writing it here, then subtracting from the debit side there will not work most of the times because sometimes the debit side may be more than a credit side. It may be a loss. You will see sums like that in the future. So it's always better to add both sides and see whichever side is more. Write that amount in the final for 7,32,000. After few sums, just looking at it, you know which side is more. So you don't have to worry after a few sums. Now, you have 7,32,000 here. Then, so the remaining is to balance profit and it's transferred to A is capital and B is capital. They're telling the ratio of 1:1. So how much money will get transferred to A and B capital as profit? Simple. 7,32,000 minus these three, that is 50,000, 1,20,000, and 1,60,000 and 72,000. If you subtract all these four values from 7,32,000, you will get the balance profit to be distributed. It's basic math, right? So minus 4,02,000. It is 3,30,000. So this 3,30,000 is the balance profit to be distributed among partners A and B. So they're telling 1:1. So it's 1:1. Then it's essentially 1,65,000 and 1,65,000. So this is P&L appropriation account. Done. Next step, we need to finish the partners capital account. Since it's fluctuating, everything will come, everything of P&L appropriation account will come in partners capital account itself in this one account. So let's see. First case, general reserve. General reserve will come in the balance sheet directly. Will come in the balance sheet directly in the liability side. Why? Because it's a reserve. I already explained before. Now, second, to interest on capital. Now, here 2 is before interest on capital. So if 2 is before interest on capital, we write by interest on capital account. Then we write 1,60,000. 1,60,000. Now, like I mentioned before, if there is no 2 against interest on capital, it was just interest on capital, and it was 2 A's capital and 2 B's capital. At that time, we'll write by profit and loss appropriation account. Then simply we'll write interest on capital for just mentioning the reason, and we'll write 1,60,000. I've already mentioned in the last class. See, these things, because you may not have a doubt now, but after some time, that is while revising, after 2-3 lectures, that's the time when you'll have all these doubts. So that's why I'm telling you now itself what doubts may arise before, so that the chances of doubts are completely eliminated. Then second, 2 salary. 2 is again salary. So again, by salary. And salary is only for B. So 1,20,000. 1,20,000. Next, 2 commission. Commission is only for A. So by commission. And how much? 50,000. And also by profit and loss appropriation. Now, why did I write by profit and loss appropriation here? I can also write by balance profit also. But balance profit, usually there's no account name called balance profit. So we write only for the final profit transfer, we write by profit and loss appropriation in spite of any case. So these are very minute points, but this will completely eliminate a chance of doubt in your mind. I don't want even a single small point to consider to trouble you in any way in the future also. So again, 1,65,000 and 1,65,000. Then anything left? Yes, drawings. We'll come to the credit side here. Net profit is already from P&L account. So this will not come anywhere. This will just be transferred to P&L appropriation account. And this net profit is completely distributed among all these terms. And finally, the balance is transferred to partners capital account as their balance profit. So this net profit is completely eliminated. And it's completely distributed in between this balance profit and this. That's what it essentially means. Now, by interest on drawings. So by interest on drawings, 7,200 for A and 4,800 for B. So again, to interest on drawing, 7,200 for A, 4,800 for B. Correct. Now all the entries are done. Everything is done. Every single point in the question is done. Now finally, what should we do? We need to close this partner's capital account. How do we close it? See, you can use a scale if you want, but if you can draw a straight line without a scale, then that also is fine. So now again, same technique I mentioned before for P&L appropriation. Both sides. Here, clear cut, it's seen that this side is more in both cases. So add this side totally. So what is it? It's 10 lakhs plus 1 lakh plus. I'm using a calculator because I want to explain the concept and finish. Go to the next concepts. You have to do mental math when you're doing revision. 13 lakh 15,000. So you write 13 lakh 15,000 here. Because essentially this A account is a separate account and B account is a separate account. A's debit side and credit side will be balanced in the end, and B's debit side and credit side will be balanced in the end. Instead of having A's capital account separately and B's capital account separately, they're just merging the accounts. Like mentioned before, I've already explained this in the previous lecture itself. Now, B side, 6 lakhs plus 60,000 plus 1,20,000 plus 1,65,000. 9 lakh 45,000. Here also 9 lakh 45,000. Now, we have to balance it. This is the closing balance. What is closing balance? For A, it's 1 lakh 13 lakh 15,000 minus 1 lakh 20,000 minus 7,200. So A's closing balance is 11 lakh 87,800 basically. Then B 9 lakh 45,000 minus 80,000 minus 4,800. So it is 8 lakh 60,200. That's it. This is the first sum. Now, most of the concepts that I taught you before were clarified here. That is, now you know how to actually do the sum. Instead of without wasting time, I want to quickly jump on to the next question. How to do it. But before that, I want you to write this down. Write question number 3 here. And write assume in previous question amount transferred to reserve is 10 percentage of distributable profit. Now, that means all the terms are same. Everything is same here. Except here it was mentioned transfer 10% of net profit to general reserve. But in the new question, I'm just mentioning transfer 10% of distributed profit to general reserve. See, I'm giving you points here itself because these are the cases where the examiner can little confuse you. So I'm giving the case first time itself so that there's no chance the examiner can confuse you. So when you revise it, everything will be in a sequence. Like this concept is done, this concept is done, and no other new question can be formed. Now, everything is the same. All P&L appropriation account and partners capital account will have the same entries. Only this value will change. So I'm just going to solve for this value. So what this essentially means is general reserve, they're telling when I take 10% of net profit, we directly took net 10 percentage of 7,20,000 and 72,000. But they're saying distributable profit now. What does this mean? That means general reserve is equal to 10 percentage of 7,20,000 plus 12,000. Wait, write it down. I'll tell you why. 7,20,000 plus 12,000 minus 1,60,000 minus 1,20,000 minus 50,000 So, wait, I have not even explained it yet. So, this essentially means 10 percentage of calculate 7,20,000 plus 12,000 minus 1,60,000 minus 1,20,000 minus 50,000. It is 4,02,000. So it's 40,200. This is what I actually, this is the final answer. Now, what does this actually mean? What is distributable profit and why I use this formula and why did I do this? Distributable profit actually means this. Balance profit to be distributed among partners is called distributable profit. So they want you to take 10 percentage of distributable profit and transfer it to general reserve. So then you can ask, why didn't I just take 10% of 3,30,000 directly? See, this 3,30,000 was found after you already found general reserve of 72,000. And then you added this credit side and subtracted all the values of the debit side and you got 3,30,000. But here you have to find general reserve. And it is telling balance profit also you don't know. So it's saying 10% of distributable profit will be transferred to general reserve. So since you can't find this, you can't find this also. It will be pending. So what I essentially did is I added this credit side fully and subtracted it by terms which I know for sure. That is 1,60,000, 1,20,000 and 50,000. Once I did that, I got a net value, right? So the net value is essentially the sum of 72,000 and 3,30,000. Okay, so when I got a sum of that, I then assume I then took 10% of that. I took 10% of this sum, the remaining value. So in that case, you can, so it's assumed that the remaining is the distributable profit. So you just have to take the 10% as the remaining. See, added the credit side and subtracted by the known values of the debit side. And after subtracted, the remaining assume it to be distributable profit. Profit to be distributed to the partners after all the other term values are subtracted. So you take 10% as a risk. That's all. Now, wait. This concept will go in depth now. Because they may give you, if they give you few sums like this with new terms, I have seen friends getting scared because only one small term, their entire confidence will go down. That too, especially during board exams. So that's what I'm doing here. Now, write again. Solution to 3A. I'm not going to leave even a single percentage of a chance of any doubt. Then assume in previous question general reserve is 10 percentage of distributed profit. Now see, these are the terms that the examiner can ask to confusion. Every term I'm going to write here itself. You don't have to wait to solve the whole sums in your reference material before you get an idea of everything. I'm going to teach you only what is required. And that concept for that, you'll be 100% ready. Now, first case, it was 10% of net profit. You directly took 10% of 7,20,000. Second case, it was 10% of distributable profit. Since without general reserve, you won't get distributable profit, you added the credit side and you subtracted by the known values in the debit side. So you get the remaining distributable profit amount. Then you took 10% of that. Now, third is 10% of distributed profit. These three are different. Now, I'm going to give you a formula for distributed profit. I want to write it down. Distributable profit is equal to distributed profit is equal to distributable profit minus amount transferred to general reserve. So the remaining you get distributed profit. This is the formula. I'll explain the formula, but for now, solve using this formula, right? What is distributable profit? We already wrote down the formula for distributable profit. This is distributable profit. Again, we'll do if you want. Add this side. What is it? We get 7,20,000 plus 1 lakh plus 12,000 minus we subtract by known values of the debit side 1,60,000, 1,20,000 and 50,000. So 1,60,000 minus 1,20,000 minus 50,000. Now we get distributable profit. So as mentioned before, it was 4,02,000. Correct? Now, what is amount transferred to general reserve? Listen to the question properly. What is the amount transferred to the general reserve? This is what we need to find. Here they are telling general reserve is 10% of distributed profit. So now you don't know general reserve. And the formula is distributed profit is distributed profit minus general reserve. So you don't know general reserve and you don't know distributed profit. You know only distributed profit. You need to find this both. How do you do it? See, here they are telling general reserve is 10 by 100 of distributed profit. Correct? So that means general reserve is rupees 10, distributed profit is 100. What I'm doing is using the unitary method and assuming distributed profit is 100 rupees now. If distributed profit is 100 rupees, then 10% is general reserve, right? So what is 10% of distributed profit? 10 rupees. So write this down. Wait. Distributed profit, if it's 100, then general reserve is rupees 10. Done. Now, look at this formula. Here I clearly say distributed profit minus amount transferred to general reserve is distributed profit. If distributed profit is 100 and general reserve is 10, to complete this formula, what is distributed profit? It's 110, right? See, if this is 10 and this is 100, this plus this will be equal to this, right? Because here is saying distributed profit minus amount transferred to general reserve is distributed profit. So what will the value be here so that this equation is satisfied? So what is the value from which if 10 is subtracted, you get 100? 110. So simply put, 110 is distributable profit. Now, once you have solved this, then it's a cakewalk. All you need to do is, here you have found distributable profit. So the formula is always divided by the value equivalent and multiplied by the value you want to find. What does this mean? Here 4,02,000 is distributable profit. So I am dividing distributable profit by 110 because thus the 4,02,000 is actually distributable profit which is equal to 110. Then I'm multiplying it by 10. That is general reserve because I want to find general reserve. So the formula is always divide by equivalent and multiply it by value you want to find. See, they directly in the in your reference material in your school, they directly give you the formula. Like if this is there, divide by 110 and into 10. They won't tell you why. This is the reason. Distributable profits formula is value is 4,02,000. So dividing 4,02,000 by equivalent amount, that is 110, and you're multiplying by the value you want to find. You want to find general reserve, so the value you want to find is 10 into 10. So this is the sum. You get 3,65,000. I mean, sorry, 36,545. This is the basic concept. Now, if you have it, we'll do a lot of sums related to this. But this is where the examiner may trouble you. And this is where they don't explain the concept in schools. That's why I told you that first itself. So here they give you net profit directly 10%. Here they give you distributable profit, add credit side and subtract by value you know. Then you get distributed profit, then take 10% of that. Then here they're telling distributed profit. So distributed profit formula is distributed profit minus amount transferred to general reserve and distributed profit is equal to distributed profit. Now, since you do know general reserves value and distributed profits value, you use this formula. Here, general reserve is 10% of distributed profit. You assume distributed profit to be 100. So, if distributed profit is 100, general reserve is 10. To satisfy the equation, 110 will be distributed profit. Distributed profit you already found here. So, you divide it by the amount equivalent to the value. So, distributed profits equivalent is 110. And you multiply it by 10 because this 10 is the equivalent of general reserve. You want to find general reserve, so you multiply by 10. So you get 36,545 as general reserve. So in this case, if you use this formula with even if you know the value of only one, in this case you knew only distributable profits value. With that, you found out these both value. As simple as that. Now, if you want to find distributed profit, same by 110 because it's equivalent to distributed profit. Then instead of 10, you multiply it by 100 because to find distributed profit, you multiply it by the value equivalent to distributed profit. As simple as that. Done. This is the concept. Now, next question. Wait, I'll solve one more question. Then we'll go home for today. Okay. Under this question, question number 4 of your PDF. So here is mentioned profit, net profit earned during the year is 6 lakh. B and A are partners. B is entitled to a commission of 10% on net profit before such commission. Prepare profit and loss appropriation account. They're telling prepare profit and loss appropriation account. They're not mentioning anything about partners capital account. So all you do is directly write down the format for profit and loss appropriation. They're telling net profit earned during the year. So it's by profit and loss 6 lakhs. Right? And it's 2 commission. Here they are telling only B is entitled to a commission. That is 10% on net profit. So you write B's capital account. We assume only it's a fluctuating capital method. Now, always follow the question's instructions. Why? In the first question, here it was telling allowed commission on 10% on net sales. That is 5 lakh. Here you directly took on 5 lakh. Here they're telling 10% on net profit before commission. Correct? 10% on net profit before commission. What does that mean? That means if net profit is this, then you subtract commission, then you get net profit after commission, right? So you're telling commission is 10% of net profit before commission. That is simply net profit because this net profit commission is not subtracted. So this is net profit before commission. So it's 10% of 6 lakhs. The why this term is used, you'll know in the next question. Wait, 60,000. 60,000. Then now balance profit. Transfer to A and B's account. A's capital account, B's capital account. Simple, we can see that only this side is more. 6 lakh is there. So directly we write 6 lakh here. And this side also will write 6 lakh. And since they didn't mention profit sharing ratio, we assume it's 1:1. Always assume it's equally if they don't mention the profit sharing ratio. Then, so 6 lakh, so it's 5,40,000 will be remaining here. We're just subtracting 60,000 from 6 lakh. So it's 1:1, it's 2,70,000 and 2,70,000. Done? Now, next question. Here the main concept, main test comes. I'm solving all relevant questions together. so that sequential revision takes place when you are revising before the exams. A net profit during the year 11 lakh, A is entitled to a commission of 10% of net profit after charging such commission. Now I explain the core concept of this while doing this some question number 3A itself. What is after charging and all? I'll explain it another time. Don't worry. Now again, they're just telling you to calculate amount of commission, not P&L appropriation account is not required because that is easy. You already learned. We'll do a lot more sums also. Now, how do you calculate commission? Your net profit is 11 lakhs. Correct? Net profit is 11 lakh. And whenever is a net profit, we always assume it is net profit before commission. We assume that no expense that will come in the profit and loss appropriation is subtracted from the net profit. It is pure net profit from the P&L account. That's what we always assume. Then A's commission is 10% of net profit after charging commission. Now, same formula like I mentioned above. If net profit after charging commission is 10, 100, if net profit before 20, then A's commission is 10 rupees. So, we already know that net profit minus commission is net profit after commission. That's what it means, right? Once we subtract commission from net profit, it's net profit after charging commission. That's the meaning. So here we wrote, know that 100 is net profit after charging commission. And A's commission is 10 rupees. So to complete the equation, net profit will be 110. So we already know net profit as 11 lakh here. So what is the formula? 11 lakh by 110. Why? By equivalent amount. This net profit is equal to this net profit. So by 110, then into what? We are finding A's commission into 10. So the value is 1 lakh. A's commission is 1 lakh. Correct? Now quickly we'll do the other sum also. E and F were partners with capital 1 lakh and 1,50,000 respectively. They were sharing profits in the ratio of their capital. See, if you look at my questions, each question will have one incremental point. It'll not only revise the previous concept, it'll add a new concept to your mind. So by the end of these 20 questions, every single concept that can be asked will be you'll be thorough in it. And they won't even be able to trouble you with new terms because that I'm going to solve and teach you as and when the lecture progresses. Like now, I'm teaching you this terms. Have a look at this. In the profit sharing capital ratio, net profit earned during the year is 12 lakh. E and F is entitled to a commission of E is entitled to a commission of 10% on net profit before charging such commission, and F is entitled to a commission of 10% after charging commission. Prefer profit and loss appropriation account. Keep this in mind. Whenever you have any doubt in a certain question, solve point by point. Go from up to down. Like I told you, the format for solving a full question where P&L appropriation is mentioned and capital account is mentioned. Solve from point 1 and write that point against each and every account mentioned. And by the end of the question, everything will be thorough. Everything will tally if you do it correctly. Now, here also, even if you don't know anything during exam, which is nearly impossible because every question that the examiner can think of will be covered here, solve step by step. Solve the things you know first. Solve the terms and points you know first. Put it in the accounts you know first. After that, whatever you don't know, in the end, it'll automatically 99% of the time will get tallied. In balance, if it does not work that way, you lose half mark. That's all to 1 mark. So now again, we're doing prepare profit and loss appropriation account. So let's start with the format first. Profit and loss appropriation account. So they're telling net profit. How much is the net profit? Net profit earned during the year is 12 lakhs. No? So 12 lakhs. You always assume it's net profit before charging any commission. It's fresh out of the P&L account. So no entry, that is commission to partner, will come in the profit and loss appropriation account. That would not have been subtracted from this net profit. Now, here they're telling they were sharing profits in the ratio of their capital. So what does it mean? That means here E has a capital of 1 lakh and F has a capital of 1,50,000. So if you take it as a ratio, it is 2:3. So this is the capital ratio. I just took 1 lakh is to 1,50,000 and shortened it to the minimum number, minimum ratio. 50,000 into 2, 50,000 into 3, 2:3. So 2:3 comes here. No, I explaining this because my job is to explain each and every point. Okay. So this is the capital ratio. Now they're telling the profit sharing ratio is the capital ratio. So assume that instead of 1:1, they share their profit in the ratio of 2:3. That is 2 to F, 2 to E, and 3 to F. Right. Now, let's start with the solution to this question. Now we have to calculate commission. Now commission, since both of them will get commission, how do we solve it? E is capital account. We assume it's fluctuating capital because they didn't mention if it's fluctuating. We'll do a lot of fixed question also. But if we do fluctuating, there's not much of a difference. It's just format difference. So you should not give so much importance to the format by solving a lot of sums in different format. If you're conceptually thorough, you need to just pay attention to the format. You'll be able to solve all sums. Now, let's solve this. So we need to calculate commission of E and commission of F. So again, net profit is 12 lakhs. So net profit is 12 lakh. That means net profit before all commission of E and F is 12 lakhs. So now, simple. Commission of E is simply 10% of net profit before commission. Correct? That's what is given in the question, right? E is entitled to commission of 10% of net profit before commission. So this is direct. This is 10% of this 12 lakhs. Because that is net profit before commission. 10% of 12 lakh means 1,20,000. So E's commission's point is over. So write 1,20,000 here. Now it's time for F's commission. Now what is F's commission? Commission of F is equal to 10% of net profit after E's commission but before F commission. Correct? What does it say here? F is entitled to commission of 10% after charging all commission. Oh, sorry. After E's commission, and also and F's commission. Because here they're telling F is entitled to commission of 10% after charging all commission. That means because only two commissions are paid, one is to E and one is to F. That means when E's commission is subtracted from net profit And also after F's commission is also subtracted from net profit. That remaining net profit after charging all commission, on that 10% is F's commission. That's what it actually means. So what does this, what does it actually mean? This means net profit before commission, we know is 12 lakhs. Correct? Then we subtracted E's commission. That is 1,20,000. Now, when we subtract E's commission, what do we get? We get net profit after E's commission. But before F's commission, right? 10,80,000. See, out of this net profit before all commissions, only E's commission is subtracted. So that means this is net profit after E's commission. But F's commission was not subtracted from this net profit. So it's after E's commission, but before F's commission. Correct? This is the thing. Now, finally, look at this question. Look at this equation. Here they're telling if net profit after E's commission and F's commission is 100 rupees, commission of F is 10 rupees. Again, same method. Net profit after E commission and F commission. Then F commission. Then net profit after E commission, but before F commission. See, I know that your concept is thorough now, but if you have a doubt, I want you to just watch the last 10 minutes again. So, see, net profit after E's commission and before F's commission is this. If we subtract F's commission from that, then we'll get net profit after E's commission and after F's commission, because E's commission was already subtracted here. It was only before F's commission was subtracted. Now, after F's commission is also subtracted, it's a net profit after E and F. Now, looking at this formula, net profit after E and F's commission is 100 and commission of F is 10. To satisfy this formula, 110. Correct? Now, after we know this, is simple. All we need to do is, this is net profit after E, but before F's commission. So what is its equivalent? Net profit after E, but before F's commission. 110. What should you find? We need to find F's commission. That's equivalent. So it's equal to calculator. It says it's actually coming in points, but see, in I need to mention another important thing for you. In your exams, sometimes you may get the answer in points. That time you don't lose confidence in yourself that, oh, maybe the points should not come in points, but why am I getting in points? If you followed every method, every concept that I'm teaching you and you still get in points, that means the points only is the answer. That's to test your confidence level, examiner is playing with you. But even if it's wrong, but you followed all the concept here, it was just some calculation mistake, then also you lose 1 mark. I'm using calculator because I made this question, I know the answers to it. And I want to teach fast. I don't want the lectures to drag on for a long time. But I want you to do it on your own. While solving with me, I want you to pause, and then whenever there's calculation, I want you to calculate, then hit continue. That's how I want you to solve from now on. So this is how it works. This is the everything that the examiner can trouble you with regarding before commission, after commission. So if you know one thing, you can find the other two. That's what I wanted to tell from this lecture. Thank you. Tomorrow we'll continue with more advanced sums.